pose with the bands. Pose with the pose with the pose with the bands. Pose with the pose with the pose with the bands. Pose with the bands. Pose with the bands.
No, my bitch so bad. You spend your cash on a bitch you never had, yeah. I'ma tell me, boy, don't lie. So I ain't gon' slide if that shit ain't by the bag, yeah. My life changed so fast.
Hey everyone, and welcome to Tax and Truth, the podcast where taxes stop being boring and start making sense. I'm Emma, and today we are headed to a land of kangaroos, called and maybe corporate tax. That's right, we are talking about Australia's corporate tax system. Is it a fair game, or are businesses getting burned? Joining me are four voices with a real insight. Zaid, our global tax analyst who seems it all. Liam, a young Aussie entrepreneur who just started paying business tax. And beside, Mr. Thompson from the Australian Tax Office. And lastly, Ethan, a seasoned corporate taxes who danced with the tax code for decades.
Yeah, then it's one word. It's say pressure.
We'll dig into that. Let's begin by understanding what corporate tax really is. So, Mr. Thompson, can you break it down for us?
Okay. Of course, corporate tax in Australia is a direct tax on a company's net profit. The standard rate is 13%, but small business with turnover under $15 million pay a reduced rate of 25%. It's straightforward on paper, but like Liam said, wrestling with reduction and compliance takes some skill.
So let's get technical. Corporate tax is based on three key perspectives, which is technique, base, and rate structure. So for technique, we just use direct taxation, and for base, we use taxable profits, and for rate structure we use flat and not progressive. So unlike personal income tax, corporate tax doesn't change with how much you earn, just whether you're big or small corporate.
Fair in theory, but when you are start scraping by even 25%, feel heavy. I'm learning to play the game, but it takes help, patience, and good advice.
And training with firm like mine have department for this. We are not dodging, just navigating legally.
So, how do we judge if a tax system is good? Maybe Zaid?
There are four main principles, which is equity, efficiency, certainty, and convenience. So people and business should pay in proportion to their ability, first of all. Second is taxes shouldn't discourage growth. And third is everyone should know what to expect in this tax. And the fourth is convenience. Of course, it should be easy to pay. So Australia's corporate tax hits most of the pretty as well.
Absolutely. With digitized filing, clarify policy and offer guidance for small business compliance.
I admit, ATO's digital system are designed. My government ID setup is smoother than I thought.
Still, traditional competition means we can't be too aggressive. If rates get too high, business look elsewhere.
So, equity must balance with economic growth?
Exactly. Australia keeps a strong welfare state funded partly by corporate tax. That's the trade-off.
So let's enter into segment 3, implication. Let's talk impact. What does corporate tax actually fund in Australia? Mr. Thompson?
Okay. It's critical. Corporate tax fund infrastructure, healthcare, education, national defense, all the basic of functioning country.
Yes, I agree, Mr. Thompson. And it's significant also because over 15% of total revenue in some years. Without it, the burden shifts to individuals, not corporate.
Okay. Which is fair. If big company profit here, they should contribute.
I agree, and we do, but sometimes it feels like we are paid as a villains and when we are following the law.
So it's not just about paying, but how fairly the system treats everyone. Is it right?
Yes, exactly, Emma, because transparency matters. If people see where tax goes, their trust will grow.
I understand. So now for a juicy topic. Let's clarify the difference between tax avoidance and evasion. Maybe Mr. Z?
Yeah, avoidance is legal. It's using tax rules to reduce liability. Think deductions, depreciation, R&D credits. Evasion is illegal. Hiding income, fake invoices, offshore shell, and companies.
Mr. Thompson?
And we take evasion seriously. The ATO audit aggressive. We've shut down avoidance scheme and recover billions.
How does this play out compared to other countries?
So for example, we can take Mexico and South Africa. Both have corporate taxes, but enforcement is less consistent. Evasion is more common, partly due to weaker digital systems and trust in the government.
I read that some ethical businesses pay in cash to dodge reporting altogether. That's why.
In Australia, even minor mistakes can trigger scrutiny. We have internal compliance checks for that reason.
So, what's the real world cost?
Tax evasion globally costs government trillions. And honest business pick up the slack. That's not sustainable.
Yes, I agree, Mr. Thompson, because public trust suffers. People lost faith when they see big players bend rules while they pay every cent.
Let's wrap up. What should listeners take away from all this?
Okay, corporate tax is just the red tape. It's part of the social contract. Pay your share and you help build your country.
And transparency is key. If you want better service, we all have to keep it fairly.
Yes.
Australia's system isn't perfect, but we work hard to make it fair, modern and responsive.
Yes, I agree. Compared globally, it's a solid model, but we must keep fighting evasion and demanding ethical tax practices.
Yeah, that's brilliant insights from all of you. Thanks to our guest and thank you to you for the listening. Remember, understanding tax is just for accountants, it's for everyone. So catch us next time on Tax and Truth. Until then, stay curious